What in the world is the Social Security taxable wage base? Hey, I'm Kaleb Paddock, the founder of 10 Talents Financial Planning, and today we're talking about the withholding that comes out of your paycheck for Social Security. If you are an employee, 6.2% comes out of your paycheck, every pay statement for Social Security withholding. If you're self-employed, it's going to be much higher than that because you have to do the employer and the employee side, so 12.4, double the 6.2%. But what I want to talk about today is how this tax or withholding goes up every year over time. When I was born, the Social Security taxable wage base was $42,000. That meant that if you earned $52,000, that $10,000 above 42 was not taxed. You got like a 6.2% raise. You're like, wow, I got some extra income. Where did that come from? Today, that wage base that you're taxed 6.2% on is higher. It's $147,000. So you need to make over $147,000 in order to avoid this 6.2% tax, and it rises every year. So next year it'll probably be like 150 and then 154 and then 160. And so what this means is if you earn more than that, every single year you are paying more and more and more in Social Security withholding. So do you have a plan to fight against this? This is something that is not on many people's radar. It's not on financial advisors' radar. We're talking about the income that continuously gets taken out of your paycheck, the rising taxes. In the example I give, going from 47 to 147 just in my lifetime, that's about 3.5% increases every year. It's a couple $100 more every year. A couple $100 more is being taken out of your income. And so you need to understand the tax code and understand which contributions. For instance, a 401k contribution does not avoid Social Security taxes. And so that's something you need to be aware of, is that doing these traditional things like a 401k contribution, if you're self-employed, whole nother ball of wax because you're paying self-employment taxes. Social Security and Medicare, 15.3% taxes. So even if you're in the 0% federal and state brackets, you have a lot of children, child tax credits, you're not getting out of the self-employment tax, the 15.3. Same thing if you're an employee, you're not getting out of the 7.65, which is your side as the employee. Your employer pays the other 7.65. You're not getting out of that. And so if you understand this, you can kind of plan ahead and say, okay, I'm going to have less and less and less income every year because as this wage base rises, I'm going to get less take-home pay. May not be a massive impact to your lifestyle, but it's happening. It's happening in the background. And this can teach us some behavior in other areas of our life. If the government and the Social Security Administration are taking more of our income and we're fine with it, like we don't really raise a stink about it, well, what about in our own lives? Are there other areas where we can increase some of our personal withholding for personal goals, for personal lifestyle? How can we be automating that? The government's already automating their cut of your income. How are you automating your cut of your income? So Social Security taxable wage base was our topic today. Not super common, not super sexy, but very practical because everybody watching this is paying it and being affected by it. Thank you so much for tuning into the video today. Bye now.